Welcome back. My name is Kris Krohn, and you have caught us right in the middle of our partnership series. Today, we're focusing specifically on where are the hot areas where I'm buying real estate? Why would I buy there? How does it work? All coming your way next. Okay, so let's break this down. First of all, I want you to understand in the game of real estate, we're not short-term thinkers. You need to learn to think in terms of decades. Most people have been bred and taught today to think in terms of what do I get tomorrow? What do I get the next day? But in real estate, you want to think in terms of decades. That doesn't mean you have to wait decades to be financially free necessarily, but you want to be thinking long-term because guess what? The real estate market rises and falls and it moves more in decade thinking than quarter to quarter thinking. Now, there are two very different kind of markets that I'm interested in. One is what I call a growth market, and one is what I call a cash flow market. A growth market is essentially a market where we're expecting some higher appreciation because a market has taken a dive. Remember in the Kondratiev cycle, when the market comes down, we know that it has to come up to a certain point. Whoa, that's exactly what I needed. That is the whiteboard. So check it out. Illustration is gonna make this a lot easier. We know that real estate does what over time? We know that real estate goes up over time. But we also know that real estate doesn't go up in just this linear fashion. In fact, real estate will move in these waves. And I just want to break this down for you. This right here is what we call a bubble. You've heard that term before, right? And down here, this is what we would call a trough. What I want you to understand is that real estate will move up over time, but one of the things that we're super strategic about a multi-decade strategy or a multi-year strategy is that we're not trying to time the market. We just know how to play the market at any time. So for example, when I talk about a growth market, what'll happen here is if this part right here resembled 2008, we know that afterwards the market took a dive because we were in a bubble. At the height of the bubble, we had all of these people that were buying real estate. Every neighbor became an investor. Everyone was spec building. And bottom line is, bubbles are a function of population. We had too many homes and we didn't have people to buy them. And when that happens, remember, a home is only worth what someone is willing to pay. So when you don't have people to live in the home because we overbuilt, what ends up happening is no one can buy, that house has no value or significantly less value. So we actually saw a significant dip in the market, and I was buying homes in Phoenix for $100,000 that previously were selling for $220,000. Well, we can gauge what this rebuild value is. One of my hot markets, for example, is Florida. I buy homes for $150,000, $180,000, homes that used to be selling for $220,000, $240,000, $260,000, and that's what they actually cost to build. So if I'm buying here in the market, let's say something for $150,000, that in the previous peak was selling for $280,000, the real question is, what does it cost to build? If that cost to build is $220,000, then guess what? There's still a $70,000 discrepancy between what we can buy it for and what it's being built for. The market in real estate does not ever double correct until it's had its first correction. So we know that the market has to travel a certain distance. And when it's traveled that amount of distance, we know that we will then be entering the next bubble. For example, right now in our current market, real estate prices are starting to go up again. People are getting excited, but people who remember 2008 are wondering, when's it gonna pop? When's it gonna pop? Nobody knows, but we do have indications. So when I say that we're into growth markets, that's where I'm specializing in places like North Carolina, Florida, that took a dive, and we can measure how much further they need to come back. And what we'll do is we'll play in that market, and then guess what? Phoenix that has already had its down and it's up where we did 1,000 homes, we've sold all of our homes in Phoenix almost. And our clients in the last 5 years made over $70 million, many of them my partners. So this is one of my strategies that I use for making a lot of money. All right, don't need that anymore. Okay, next I want to talk about markets where we call them our cash flow markets. Our cash flow markets are different than our growth markets. Our growth markets, we're looking at 20% plus ROI, but in my cash flow markets, I'm still getting a 20% ROI. There's just a less of an emphasis on appreciation and more of an emphasis on cash flow. So in those markets, we can get homes that actually have sometimes double the cash flow for the money that comes out, which is great for a partner that's really focusing on having more cash needs of, hey, let's get this thing optimized for producing more cash flow. And I just want to pause for a moment. I want to help you understand something. When we're building this thing over the decades, This first 5 to 10 years of taking a small amount and turning it into a lot of money, we're not really trying to pull a lot of money out of this thing. I want you to understand that every time we turn a property, there's profits. I'm gonna be rolling 100% of my profits forward with you. You might have initially put the money in for doing the deal, but I'm taking all of my profits and I'm reinvesting them. We can have a distribution on the cash flow from time to time, but basically when we sell a property, we're gonna take all those proceeds and hopefully, if we're on the same page, take that next property and to roll it into 2 more. Because what we want over time is a handful of properties to turn into an armful of properties to turn into too many to count properties. That's how we build tremendous wealth with time and rules. So there's a time for cash flow, there's a time for growth. You know, I'm gonna need that whiteboard again. All right, here we go. So we've been talking about our growth markets, we've been talking about our cash flow markets. So for example, Orlando and Charlotte, those are 2 areas where we're getting some of the best ROIs that I've seen. Strong cash flows, great growth in the area. We could talk about the market specifically, like for example in Orlando, specifically we're south of the parks in Kissimmee, and in that county what we're finding is that people earn twice as much money as they do for the type of home that they're renting, which means they're making $60,000 a year, but they're living in a home where they would only need $30,000 to rent in it, which means we're having very low delinquencies, we're having no problems with our vacancies, people are making really, really good money. Where Charlotte is a booming area where we have FedEx and all these places coming into town, they're moving here, they're setting up shop, we've got high growth, okay? So that growth means over time, good cash flow, but great growth. We take a look, however, though, at cash flow markets like Memphis and Indianapolis. You know, Memphis, we're scoring some ridiculously high cash on cash returns. Indianapolis, the same, but this one has a lower TOP, total out of pocket. We're doing this because homes like this might need $25,000 or $30,000. Some of these other ones might need $35,000. Some might need $45,000. That's your 20% down payment. And I have a variety so that we can make different amounts of money work. And all of these are going to growth and give us good things over time. But don't get stuck. There are other investments that I'm doing in other markets. I just want to help you understand the lay of the land for the idea that there are growth markets, there are cash flow markets, there's advantages, pros and cons, and we look at all of that when we're deciding what investment makes the most sense for us to take our portfolio to the next level. All right, friends and potential partners, I wanted to shoot this video so you can understand more about the markets that we go in and some of the reasons of why we go there. Next, we're going to be talking about how we hit up an amazing deal.